Your real estate income's not passive, but since you're a real estate professional, your losses on your investment real estate is has the exception where those losses will offset your realtor income. So that's really, really important. I've seen that messed up on many, many tax returns too. I would say without planning, just the default way that our professional software works, and definitely the way like TurboTax works, and those kind of software, those passive activity losses are never going to offset, and people miss that all the time. You really have to know what the right answer is to get the tax software to do it right.
Yeah. How can misunderstanding things like capital improvements versus repairs, how can they lead to unintended tax penalties?
Yeah, capital improvements are not deductible. They are deductible over a long period of time because they just increase the basis and they depreciate things. First, we want to look at, is it a repair or capital improvement? And if it's a repair, it's deductible in the current year. So if you're just repairing something that's already there, like your deck falls apart and you repair it, that's a repair. You're going to expense that right now. If you have to tune up the paint on the house, that's a repair. You're going to do it right now. You're going to expense that right now. There's some guidance. There's a code section, then there's some regulations called the repair regs. And then there's some court cases where people wanted to deduct something as a repair, but it really was an improvement, and the IRS challenged it, and the taxpayer that won or lost. And so from all that, from the regulations and from the court cases, we have a lot of guidance on what's a repair and what's an improvement. A repair is deductible in the current year, and an improvement is deducted over the whatever the life of the property is. So you very much want to be a repair. Now, if you determine that it's not a repair and it is an improvement, then you want to look at what category, because right now we have bonus depreciation. So if it's the kind of improvement that qualifies in the 5, 7, or 15-year categories, you can take bonus depreciation and expense that right away. So the first level is at repair or improvement. Then the next level is it in one of these categories where we can take 100% bonus depreciation and depreciate it in the first year anyway, even if it is an improvement?
Mm. What are some trusted sources or professionals investors can rely on to get accurate current tax information?
Well, you want a CPA or a EA that is staying up to date with real estate, investor laws. There's this whole section of the code that's just for real estate investors and other passive activity investments, but mostly it applies to real estate investors, called Section 469. And a lot of CPAs just never read that, never have to worry about it, because all their clients are just individuals or retired people or regular business owners. But if you're a CPA or an EA that specializes in real estate investors, you're in that code section all day long. You're trying to figure out how to get those passive activity losses, used and utilized against your other income. But it's a real specific area of the law.
Yeah.